Carlisle there. Lyrical styling is beyond compare, right? Well, good morning. It's 8:42 here. We're at 18 now before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time to check in and find out what's going on with your money with your financial advisor, Phillip Statler from Statler Financial Services, who is on the phone this morning. Phillip, good morning. Good to hear your voice today.
Hey, good morning, Dave. Glad to be here. I wish things were a little prettier, but right now red ink yesterday, red ink to start off today. It's just been kind of a red ink week.
Yeah, it does sound like it. It was more red ink yesterday. The Dow was down 172 points. The Standard & Poor's down about 19. NASDAQ down about 76. We're only talking about 1/3%, and as high up into nosebleed territory as we are, this is in no way, manner, or form of panic. But then the morning numbers come through, and one would normally end up saying, well, this is all good news. But you and I were kicking it around before going on the air this morning, and boy, are we hot stuff all of a sudden. Reading on the GDP, 3.8% last quarter. We've gone from a 3% guesstimate to 3.3, I think, last month. Now 3.8%. That's all. Do I dare say that's almost into overheating mode?
Yeah, that's my take, Dave, at this point. I mean, and that's the third estimate, right? So I think that's the final number. I don't think there's another one. I think that's the final reading because that's the third one. So we'll end up the quarter as officially probably 3.8% increase in GDP. And you got to think, Dave, if we're growing at that pace, then why do we need to fix anything? Why do interest rates need to go down? If we're growing at that level, why does the Fed need to do anything?
Which is kind of the topic that we were getting into before going on the air. I mean, there is a big tendency on Wall Street for good news to be bad news and bad news to be good news. If we only grew at like 1%, the market would say, holy crud, we're going to get maybe 1.5% worth of interest rate cuts and go crazy. Now we're looking at a 3.8% gross domestic product, which is the best news President Trump and the administration could possibly ask for. But it looks like Wall Street is saying, oh, my gosh, we aren't going to get the interest rate cuts we wanted to because they are not they aren't necessarily reacting much at all, at least according to my delayed quotes I'm looking at.
No, they're not. They continue to be in pretty big red territory right now. Not seismograph-wise, but still solid red to start off the day.
And we got more good news, bad news stuff coming out this morning. The employment market is looking better than we thought it was. Last week we had 231,000 initial claims for unemployment. This week they dropped down to 218. And that starts getting us down into the range where we're way below what we normally consider the normal sifting and winnowing of people changing jobs. That's 2 weeks in a row where we've gone down and trended downward from that 250, 260,000 number. And that adds some credence to the notion that the employment market is nowhere near as bad as we were afraid it was either.
Yeah, and that's the lowest we've seen, Dave, since mid-July. So it's been a little while since we've seen numbers down that low. Hey, we also yesterday, after you and I were off the radio about 10 o'clock yesterday morning, new home sales came out.
New home sales as well, wasn't it?
Yeah, significantly better than expected. July's number was 664,000. August, 800,000 new home sales. So that was a big jump. Obviously not enough to raise any of the stock market yesterday, but still, that's good news. Again, going towards the fact that, hey, the economy, maybe it's not as bad as we think it is or feel it is.
You know, a good friend of mine that I used to work with on the air around here that you know well always said the economy is like an aircraft carrier. It's danged hard to turn, And sometimes when it decides it's going to turn, you don't find out it's turning until it already halfway has made the turn. And kind of looks like we might have made a turn we didn't know was happening, doesn't it?
It definitely is looking that way, at least, Dave, from today's snapshot, right? I mean, we got more economic news coming tomorrow, which who knows what those numbers are going to look like. But we also had a couple other numbers. I don't know if you saw these or not, Dave, but durable goods orders skyrocketed. They were a minus 2.7% in July. The expectation was for them to still be down about 4/10. They actually were positive. Uh, Durable goods orders went up by 2.9%.
Wow, that's 100% reversal from the negative number from last month. When, like I said, we've had nothing but good news this morning. It's too bad the investment community isn't happy with it, but beyond that. And as you say, tomorrow it could be interesting. And my guess is if the economy is getting as active as we're thinking it is, tomorrow we end up getting the PCE inflation rate. That's the number that Jerome Powell at the Federal Reserve says is his most credible number, the core number for the PCE inflation. If houses are selling better than expected, if we're buying durable goods more than we expected, if the economy is growing at the rate we're expecting, I'm going to have to assume that the PCE core inflation is going to be a little bit of a disappointment and maybe even tick up a little bit. Wouldn't you guess that?
I would think so. I mean, the expectation is for it to tick up about 0.1% to 2.7% is what my guys are. All the survey from Market Watch is looking at a 2.7% year over year for the PCE, meaning that it would go up about 0.3% for the month of August.
Yeah, and that means the core number is probably a little bit higher than that because it's been tracking harder and closer to the 3% number than we'd like to see. So we might have, quote unquote, a disappointment on the PCE inflation number next week. Other tidbits going on this morning is it's all nothing but good news. Honda made an announcement. This is bad news on the employment front, that they're going to discontinue their assembly plant managed by GM in the United States. They're going to discontinue that. Microsoft announced that they're adding a new AI engine to that Copilot thing that pesters you on the new versions of Windows. Now we're going to be using Anthropic's artificial intelligence engine. I don't remember them. Which one are they? That's not
I don't know. I don't know.
That's
that
not
I've
the
heard of that
Chinese one, is it? Yeah, that one's a new one to me. It kind of surprised me. And I'd mentioned earlier that another Fed governor was doing the rubber chicken circuit yesterday, saying he wants more interest rate cuts. So we got conflicting numbers coming out. We got conflicting points of view coming out of Washington. And we got at least one or two, maybe reports that we can share with. How are the companies reporting this morning?
Well, I want to mention this first before I do, because I saw that Starbucks is going to close some stores and they're going to lay off approximately 900 employees in the first round. And they're talking, and that's at the store level because they're closing stores. Then there's a second round of layoffs that they've got planned, or maybe they already did this one. Oh, it was earlier this year. They did 1,100 corporate employees. So we're going to see some more people in the unemployment line here shortly.
And Starbucks has a tendency, if you want to follow the stereotypes, as being the backup plan for people that can't find jobs in their chosen fields. So not good news for people that are already harder to employ than people with the blue-collar skills that folks are looking for these days.
Yeah. So CarMax was my big report for the day. They had a very disappointing quarter. They only earned 64 cents a share, well below the $1.04 they were expected to make. Revenue also missed by not quite $500 million. So really, they are getting smashed this morning, Dave, down almost 15% today.
Ouch. Did they say there was a particular sector or cause?
They did not in the short report I got here, but it's not looking good for them.
I was kind of guessing, just coming up on the end of a model year. I know a lot of new models from 2025. Now the 26s are coming out. there's a lot of incentives on new models and whatnot. This might be a month in which new cars are actually selling better, and they get an uptick over premium pre-owned cars. But that's just a guess on my part.
Well, and they could be because some folks now with the new bill, the new tax bill that passed, will get an interest, can deduct the interest. So it's a sector of people that are, I think you have to make less than $100,000 or something like that. It's a very limited, but there are people that if they buy a new car that's manufactured and assembled in the United States, they can now deduct the interest. It has to be a new car.
That could very well be funneling some used car revenue into new cars.
Yeah.
Like it's resetting the table, off day yesterday. You and I are both kind of thinking more than anything, just taking stuff off the table and trying to stay safe for the moment. 45 minutes before we open this morning, what are we looking at?
Dave, we've got, again, a lot of red ink. We've got the Dow Jones Industrial 30 now down 0.3%. We've got the S&P 500 down almost 0.6%. NASDAQ 100's down 0.75%. That's like $187. And then the Russell 2000 is down 1.1% this morning. So I'm going to say solid red across the board. On the other side, we've got silver taking a huge jump, Dave, up 1.2%, $44.73, which I think is right at the 52-week high. Gold's down about 0.2. Crude oil's down about a little over 0.6%, trading at $64.57 a barrel right now.
All righty. I'm looking across the pond, and I got a mixed bag pretty much on both the two overseas markets. Asian Rim was a decidedly mixed bag. Japan was up by 0.25%. Mainland Chinese markets, one was off by a little. The other was up by about 0.2%. On balance, I'm calling the Asian Rim flat over the evening hours. Europe, pretty much everybody is in some red ink, not catastrophic, but all the chit-chat at the United Nations did not help the mood in the European community. Average European index is down by a little over 0.2% halfway through the European trading day this morning. Somebody wants to figure out how to make a retirement plan. This is one of those days where good news, bad news, nothing really makes sense intuitively. I need a pair of eyes to get the risk out of my portfolio. How do I find you to do that?
Well, you know, Dave, the closer folks get to retirement, the more risk plays a role. And that's why I created the Core Retirement Design. Folks, to start out, is a 30-minute phone call. You and I trying to figure out if you're on the right path to the retirement you always dreamed of. Give us a call at 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again together tomorrow morning. I will see you then, my friend. I appreciate it.
All right, man. Have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.